Hello everyone and welcome to today's webinar, Getting to Grips with Making Tax Digital. This is the latest in a series of bite-sized webinars brought to you by the Business Lincolnshire Growth Hub. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You have joined the presentation listening through your computer's speaker system by default. If you prefer to join over the telephone, just select telephone in the audio pane and the dial-in information will be displayed. This will often provide clearer audio. As a participant today, you have joined in listen-only mode. You do, though, have the opportunity to submit text questions to today's presenter by typing your questions into the questions pane of the control panel. You may send your questions in at any time during the presentation. We will collect these and address them during the question and answer session at the end of today's presentation. Any questions which remain unanswered will be picked up afterwards. Before I introduce the main speaker, I would like to say a few short words about Business Lincolnshire. The Business Lincolnshire Growth Hub is the business support arm of the Greater Lincolnshire Local Enterprise Partnership. Through the Growth Hub, we aim to increase the culture of enterprise and innovation by providing effective coordination, communication and promotion of the support that businesses can access. We want to provide a single front door through which businesses can access all the support that is available to them, either publicly funded or on a fee-paying basis via the private sector. Please sign up to the newsletter at www.businesslincolnshire.com. You click on the register button on the top of the homepage to find that. It's now my pleasure to introduce the main speaker for today's webinar. Michael Ball is Tax Director at Streets Chartered Accountants and looks after a varied portfolio of individual, partnership and trust clients dealing with income tax, capital gains tax and inheritance tax compliance requirements, as well as HMRC inquiries and consultancy work. Michael became a qualified member of the Association of Taxation Technicians in 2009 before qualifying as a Chartered Tax Advisor in 2012. Over to you, Michael.
Thank you, Juliet. So welcome everyone to today's webinar on Making Tax Digital. We're going to go through today, first of all, what Making Tax Digital is. We're also going to look at when it starts, who does it affect, what is actually changing and trying to debunk a few myths in there. What do you need to do to prepare, what your options actually are in getting ready for Making Tax Digital, and how and when to sign up and get on board with Making Tax Digital. And then, as Juliet said, we'll have a question and answer session at the end to answer any queries you may have. So I normally like to start with a quote. This is the quote that's from Mel Stride MP, Financial Secretary to the Treasury, and you can read it for yourselves on screen. The last sentence where it says Making Tax Digital helps them to do just that, and by that he means to seize the opportunities that digital technology offers. I would perhaps disagree with the use of the word helps. I think pushes people to use those benefits is perhaps a better way of putting it. So what actually is Making Tax Digital? Well, it's part of the Revenue's wider strategy to make your interaction with them much more digital in nature. They're aware that a lot of people are now used to things like online banking and just generally interacting with other businesses through an electronic medium, and they want to push your interaction with HMRC into this same sphere of using the online system. It's also to move VAT initially, income tax and corporation tax eventually, more in line with the pay-as-you-earn system for submissions. Those of you who currently submit pay-as-you-earn records to HMRC will know that you submit these through the Real-Time Information System, or RTI, and Making Tax Digital is a move towards similar types of system for the other three main taxes. Their stated aim for Making Tax Digital is to reduce the tax gap. They believe this will happen by improving people's record keeping and therefore reducing errors of minimising re-entry of data. We'll go through the process and the journey that the revenue want the data to flow, and you'll see how they expect it to reduce errors as we go through. So when does this actually come in? Well, it was originally planned to go live in April 2018 with income tax. This has thankfully been delayed because they realised that the systems weren't going to be ready in time. So we're now in a position where it's Making Tax Digital for VAT, which is leading the way. Mandation for this starts from April 2019. So as I'm doing this webinar, we are about four weeks away from this mandation. So it doesn't leave us a lot of time now to get ready. But if you start now, you can still be ready in time. It's initially going to be for VAT registered businesses with turnovers above the VAT threshold, so 85,000, and it commences with your first VAT period starting after the 1st of April 2019. That in a bit more detail. Eventually, we expect it to roll out for income tax and also corporation tax. The current standing on that is that it's been said that it will not be before April 2020 at the earliest. Most likely be income tax first, as there is already a pilot underway for income tax, corporation tax to follow later. We do not yet have a consultation document published on corporation tax, and so we'd expect this to be a good while after 2020, or at least we would hope so. So a bit more detail on the when. So this table shows you how it works for different VAT periods. So if you've got a monthly VAT period, then you will be mandated into Making Tax Digital for VAT from the 1st of April 2019 in regards to your April VAT return. So you'll continue to submit your March VAT return under the old system, and then after the 1st of April you could sign up. However, I've got some notes later on the slide in regards to timing of that sign-up procedure because it needs to be done with some care. If you're a quarterly return and you're on a calendar quarter, then again you're mandated from the 1st of April. If you are staggered, so if you've got a quarter that ends at the end of April, your first MTD quarter will start on the 1st of May running to the 31st of July. First submission won't be until between the beginning of August and the 7th of September. So you won't actually be mandated into MTD until 1st of May, and so on for a further staggered quarter. So I've said it starts from April this year. There are some VAT registered businesses which have an extra 6-month deferral, so delaying them until October. Those are, as you can see on the screen, trusts, not-for-profit organisations, by which of course we mean charities, but be aware that's only for charities which are not set up as a company. If it's a charitable company, this delay does not apply. VAT groups are also one of the big ones which are delayed, mainly due to the complexities involved in VAT groups. So if you're delayed, you don't come in until October 2019. For everybody else, it is April 2019. This screen is a slide I've borrowed from HMRC and is their timeline for Making Tax Digital. It starts off with the various pilots and the different phasing in of the pilots. We are now all the way around almost to the 1st of April 19 when Making Tax Digital becomes mandatory. There is in fact already a pilot open for anybody who will be within Making Tax Digital. So if you wanted to sign up early, you can do. And then finally, there is the October date there for those who are deferred. So who exactly does MTD affect? Well, it affects all VAT registered businesses, landlords, including charities, with a trading turnover over 85,000. Now, of course, in terms of landlords, this won't apply to most. It will only apply to those who have opted to tax, so they are charging VAT to their tenants. Those with a turnover under the 85,000 threshold and are voluntarily registered for VAT, they are not required to comply with MTD for VAT, but they can join if they want to at this stage on a voluntary basis. However, I would expect this position to change in the future, as I would expect the revenue to want to close their online portal that is there currently. But please note, once you are in MTD for VAT, you are in. Once you've signed up and you've made a submission under MTD for VAT, you are then in it until you deregister for VAT. So even if your turnover then drops below the threshold, but you stay registered for VAT for business reasons, you will still be required to comply with the MTD regulations. Once you are in, you are in. There are some exceptions and some exemptions. These broadly align with the current exceptions for filing VAT returns online that we have at the moment. The revenue are not expecting a great number of additional exemptions to apply. To apply for an exemption, you need to ring the VAT helpline, and the exemptions for those people who are due to their religion, so they're on religious grounds, they can't engage with the digital world, can't use computers because of their religious beliefs. If you're in insolvency, then it's voluntary, you don't have to do MTD. And if you cannot do so because it's not reasonably practicable, this means that if remoteness of location is a problem, your disability or your age means that you cannot engage digitally, then you do not have to do MTD. That being said, as I say, they are not expecting a great raft of extra people to be exempt. If you currently file online, they will expect you to do so under MTD as well. So before we move on to what is changing, let's have a bit of a look at what is not changing. Pretty much everything that builds up the VAT system isn't changing. The VAT rules themselves are not really changing. So you'll still be submitting the same 9-box VAT return as you do now. It's the same information being submitted. There is no backing data to that return that's being submitted. It is just the current 9-box VAT return. Now, of course, we don't know exactly what a VAT return is going to look like going forward, following Brexit or not Brexit, or however that pans out. So it's still the same 9-box VAT return though that you will be currently submitting. Your VAT return frequency won't change. The payment deadlines aren't changing. The due dates for the returns aren't changing. If you're monthly at the minute, you stay quarterly. If you're monthly at the minute, you stay monthly. If you are quarterly at the minute, you stay quarterly. If you are annual, you stay annual. It's as simple as that. Eligibility for VAT special schemes isn't changing. If you use the flat rate scheme now, you continue to use it, and so on for other VAT schemes. What is changing is that for the first time we're going to have legislation which dictates how a business keeps its records, and those records will need to be kept digitally in what they're referring to as functional compatible software. I'll explain what we mean by that on the next slide. In terms of the submission of your return, this will have to be done direct from your software, so you won't be able to re-enter your figures onto HMRC website and submit the return via the portal. As I've already said, it comes in from April 2019 for your first VAT period starting thereafter, and this may actually fall partway through your accounts year, so you may have to change your record keeping part of the way through your accounting period, which of course is not ideal. So what actually is functional compatible software? Well, this is either a software program or a set of programs or products which can do several things. That can record your records digitally, that can provide information to HMRC and can receive information back from HMRC via the API platform. API is just application program interface, which is the way that the two systems will talk to each other. So your software and the revenues programs talking to each other. Where does that leave spreadsheets? Well, initially spreadsheets were not going to be allowed. This was going a long time ago now when they were first looking at bringing it in for income tax. There was a lot of resistance to this. Everybody was very strong in advocating the benefits of spreadsheets, particularly for those businesses that don't have a great number of transactions. Landlords, for instance, they've just got their rents possibly even every 6 months, and maybe don't have a great deal of expenses. Consultancy businesses, again, they may just raise an invoice once a month, and again not have a great deal in the way of expenses to claim. Spreadsheets for these types of VAT registered business are a viable option. The Revenue have relented and said that yes, you can use spreadsheets to keep your digital records. However, in order to facilitate the digital process from records through to submission of your return, the spreadsheets will need to be linked to bridging software to perform the submission of your VAT return. So what that means is that you will need some bridging software to do that. There are a lot of those out there already. I'll talk about them a little bit more later on, but that is what functional compatible software means. And I've got at the bottom of the slide that if you use a set of programs, there will need to be digital links between them in order to build your VAT return. But there is a soft landing period for some of these. And again, we'll go through these in more detail later. So what do you actually need to do to prepare? Well, for some businesses, it's not going to be a particularly big change. If you're already keeping digital records and submit your return through software, there's just a sign-up procedure that you'll need to go through and a bit of tweaking your software to tell it you want to submit under MTD. And again, we'll go through those later. For others, there's going to be a very big change, particularly for those businesses who are keeping manual records currently. They are going to have to get on board with digital records, either themselves or maybe via a bookkeeper. But whichever way, there's three things you need to consider. The first is, how do you keep your records currently, and am I going to need to change that to move over onto digital records? The second is, which software are you going to use to do this? Are you going to use spreadsheets? Are you going to use accounting packages? How are you going to do that? And the third point is, how will you then make your submission to HMRC? So looking at digital records initially, I've got a few slides on this. There's a fair bit of detail in there, but the summary is effectively that you need to have transaction level data entered into your digital records. So in terms of invoices, the invoices themselves don't have to be raised in the software, but the details need to be entered into there. You don't have to take digital copies of all your receipts or your invoices. You can if you want to, but that is optional. It just means transaction level data entered into the software. In terms of which software, it's either using software, accounting software, or spreadsheets to do these digital records. The software does not have to be cloud-based. It can be, but it doesn't have to be. If you've got an MTD compatible piece of software which is desktop based, that will be absolutely fine for the requirements of digital records. The records can be kept either by the taxpayer or by their agent, but they have to be kept digitally. So if you currently use a bookkeeper or your accountant does your bookkeeping for you, that's absolutely fine, but they do need to be digital records. And as I've already said, spreadsheets need to be linked to bridging software in order to do the submission, but there are several products out there available already. A bit of detail on the digital records. You need some standing data in there, so business name, address, VAT number, that sort of thing. If you've got accounting software, that's the sort of information that you will build in there in the settings and standing information sections. For each supply, you're going to have to record the time of supply, the value of the supply, and the rate of VAT charged. What you need to be thinking about is the VAT return needs to be completed within the software. So the software needs to have all the relevant information in order to prepare that return. So of course it needs to know the rate of VAT, and it needs to know the value and the date to put it in the right periods and populate the boxes correctly. So as I've said, data must be in a digital format, and for your outputs you need to have it split. So if you've got a receipt or indeed issue an invoice that has got different rates of VAT on there, you need to enter it into your record, split down between the different rates of VAT, so that the VAT return can be prepared correctly in the software. Again, time of supply, any VAT that isn't reclaimable, so if you've got personal use in there, you need to make an adjustment in the software for that as well. If you're using the retail scheme, then you only have to record the daily gross takings, not every single transaction. that is actually the requirement of using the retail scheme anyway to do daily gross takings. So the adjustments, so if you are partially exempt, for instance, and you currently make manual adjustments outside of wherever you keep your records, and then use those adjustments to make your VAT return on Revenues portal, the adjustments themselves you'll still be able to calculate outside of the software, but you'll need to re-input those adjustments into the software, effectively journal them into the accounting software in order to be able to submit the VAT return. So moving on to the software itself, do you need to upgrade, and is it time for the cloud? Well, the things you need to consider first of all is, if you're not currently using software, then this really is the time that you need to start. As I said before, there is going to be a legal requirement to keep your records in a digital format. So you need to consider which software is going to be best for you. Is it going to be a spreadsheet? Is that suitable for your business? If you're currently doing manual records and you really feel that you're not going to be able to make the transition over to digital records, is this the time to think about employing a bookkeeper? Maybe getting your accountants to do your bookkeeping for you and help you with your records that way. One option that we've put forward at Streets to some of our clients that do manual records is that they continue to do those manual records as they do already, for their own internal purposes, but then provide us with those records in line with their VAT returns. We transfer those records into a digital format so that they have digital records and are compliant, and then we can deal with the submissions for them as well. If you currently use software already, then the first step is to talk to your current software provider. What are they doing to become ready for Making Tax Digital? Hopefully, they're well on the way to having a compliant piece of software, if they haven't already got one. A lot already do, but talk to them. You may need to upgrade, and if you're going to use spreadsheets, then you're going to need to look into some bridging software solutions. There are a lot of these products out there already, and Streets are also going to be rolling out a bridging software solution to our clients as well. Also consider, is it the time to upgrade your software or maybe switch? A lot of software providers have used this as an opportunity to encourage their users to switch to their most up-to-date platform, to upgrade, in effect. They've, of course, done a lot of work behind the scenes getting their software ready for MTD. HMRC have effectively just provided a set of rules and left it to the software providers to come up with the software to enable people to actually comply with those rules. So it's been good and bad for the software providers. They've got a great sales pitch. Equally, they've had to do all the work behind the scenes to get this system ready for working. But the first thing to do is definitely consult with your current software provider to see what they are doing to help you. Equally though, you need to consider what software is right for you, which is the right software that's the best fit for your business. And this might mean that you're using a particularly bespoke piece of software that is great for running your business and in your particular industry. It might not be being updated for Making Tax Digital because accounting function is not its primary function. It's there to run your business. If that's the case, you might need to look at bringing in an additional piece of accounting software in order to be compliant with Making Tax Digital. That doesn't mean that you should necessarily throw away your old piece of software. If it's good for using and running your business, then that has its advantages from a business point of view. So you need to consider this all in the round. In making these decisions, you need to be aware of the software developments that have come along in the last 5 years. There's a lot of developments, particularly in regards to cloud-based software, and that can bring a lot of benefits to your business. So now might be the time to consider looking at these options and whether it's time to make the switch to the cloud and access these additional benefits. So review your needs and review the way you work as well. Which piece of software is going to fit in best with the way you run your business and the way you keep your records currently? But don't just concentrate on the way you do it now. Is there perhaps a way that you could change the way you keep your records and the processes you use to take advantage of these new software solutions, and how best to access those from your business point of view. This slide just highlights some of the additional benefits you can get from using some of the more modern software, particularly the cloud-based software. The biggest and perhaps the best one of these, I think, for usefulness from a business point of view, is the live bank feeds. The live bank feeds, I should say. So with this setup, every night your bank transactions will come across into your accounting package. When you log in the morning, they'll be there waiting for you to post into the various journals and various entries. So the way this works is you can set up rules so that standard payments that you make every month, for instance, or even every week, or just on a regular basis, you can set up a rule to say that when I pay this person or this business, post it to here. So always put my BT payments to phone and broadband or something like that. That then gives you a list when you log in, and it says, we think this should go here, do you agree? You say yes, you can say no and change it. For the ones you haven't set rules up for, you then tell it where to post it. But what it means is that on a daily basis, you keep on top of your accounting records, and it means that you can then use the reporting functions, which are also within the software, to give a live and really up-to-date view of how your business is doing. It's also invaluable when it comes to credit control purposes and that sort of thing. You can even, through certain add-ons to the software, set up rules so that if you've issued your invoice through the software, for instance, you can then set up a rule so that if it hasn't been paid within a certain period, an automatic chasing email is sent. There are lots of things like this that you can add on. If you have your employees claim a lot of expenses, there are particular add-ons for running these expense claims, such that they can make them on the go via the phone, and certain systems like that, which can actually add real benefit to your business. Now, I'm not going to dwell on these anymore, because these are more issues and benefits that come from being able to use software as opposed to getting you ready for MTD. At Streets, we tend to use QuickBooks, Xero and Sage as three of our main software platforms, and then of course for our other clients, particularly farming clients, we will use other software as they do. So Landmark and FarmPlan are two of the main ones for farming businesses. If you have any questions on software and you'd like to discuss them, then please contact Streets, and one of our software specialists will be happy to help you. So now we've looked at what records we need to keep, and we've decided what things we need to consider in terms of our compatible software. How do we actually go about finding that compatible software? So the Revenue website is actually very good for this. They've put up a section on there so you can see which VAT software is available now, which VAT software is in development. And if you scroll further down that page, you will find the list of those that are available now. It gives you a link to their website. It says who can use it, whether it's just agents, just businesses, or indeed both. And it also gives a list of its features, so you can get a flavour for what it can do from a VAT point of view and MTD. So it's well worth a look on there to see what is available. Try and find your own software provider. Are they on there already? Is this something that they are already in discussions with HMRC about? Hopefully they are at this late stage. So it's well worth having a look at the Revenue website for that. So that's your software options. That then flows nicely into how you're going to submit your VAT return. If you're using a spreadsheet for your digital records, then as I've already said, you'll need to use bridging software to do this. There are a fair few of these already available, and they work in an incredibly simple way. If you're using a spreadsheet, there is the ability within a spreadsheet to name a cell. In Excel, this is in the top left-hand corner of the screen, and you can name the cell, and as prescribed by the bridging software, you name the particular cells of your VAT return which you've produced in your spreadsheet certain things. So it might be, say, VAT B1, VAT B2, VAT B3 for the various boxes. The bridging software then looks at that spreadsheet and finds the relevant cells named appropriately, uses that information to produce its VAT return and submits it to HMRC. This is done via a digital link and so is compatible with MTD for VAT by having this seamless digital link between your records and submitting your VAT return. For other situations, it might not be quite so simple. If you're keeping your records in a non-MTD piece of software, so as we discussed, a bespoke piece of software that works really well for your industry, maybe running your factory from it, and that's where your records are, then you need to get those records somewhere where you can prepare a VAT return. That might be a spreadsheet via an export function perhaps, or maybe at this stage just re-entering the details. There will need to be a digital link between that piece of software and where you're preparing your VAT return. The Revenue have realised that that digital link may take a while to get into place, and so have given a 12-month soft landing period on that, so through till April 2020. So you'll probably use that software to keep your records, export it to spreadsheet to produce a VAT return, and then use the bridging software to do a submission. If you've got your records in your MTD ready software, then that is the simplest solution. You'll be able to submit the return directly to HMRC from the software. No digital links required because it's all there and is submitting directly to the Revenue. And any adjustments you need to make for partial exemptions, etc., as we've said, you'll be able to journal those back into the accounting software in order to make those adjustments to do your VAT return. So this is a flowchart which effectively just follows what I've already said. So if you've got all the records in the spreadsheet, so if you started in the middle, you'd have a mandatory digital link to your bridging software, and then it submits it through the API system. If you've got it in your records in a non-MTD software, you have a delayed digital link into the spreadsheet, and then a mandatory digital link through the bridging software. A similar situation if you're in a VAT group or if you're using various pieces of software to keep your digital records. You may have one piece of software you raise your invoices in and another that you keep track of certain expenses in. Those need to feed together to produce a VAT return, and those digital links are again delayed for 12 months but will need to be there after April 2020. This slide is referring again to the adjustments which I've mentioned a couple of times, so I won't dwell on it, but it just shows in a diagrammatic form how this would actually work. So you keep your digital records in a piece of software. You would take the information from that software plus possibly some other information required from external to do the calculations, probably in a spreadsheet, for instance. Examples of these are partial exemptions or capital goods scheme. You then manually re-enter those adjustments back into your software through a journal. This is not part of the 12 months delay. This is something that the Revenue appreciate needs to be something that involves a manual interaction, and so they are quite happy for this to remain a manual process of journaling it back in. If you can do it automatically, then that is great and they prefer it, but it's not necessarily required. So once you've decided how you're going to keep your digital records and you understand how you're going to do the submission, you do actually need to sign up for MTD for VAT. It's not something that will happen automatically. You should hopefully by now have received a letter from HMRC saying that either they believe you are part of MTD for VAT from April or you are one of those deferred until October. If you haven't, then I'd recommend ringing the VAT helpline to just check on their records and check their position for you. But effectively all the letters are doing is telling you that this is coming and you need to prepare for it. So as I've said, you do actually need to physically sign up. The timing of doing that sign up needs to be done with some care, and we'll cover that off in a minute. But to do the actual sign up itself, you do this via HMRC's website. And at the minute on there it says sign up for the pilot because it's going to be the same sign up procedure that will roll forward into the mandation period as well. You can sign up now if you want to on a voluntary basis and sign up with the pilot and get ready for MTD becoming mandatory in April. But again, as I said, you need to take care as to when you do this, and we'll cover that in a second. So you go to the Revenue's website, find the relevant section. An internet search via Google is probably the easiest way to find it. Sometimes that works a bit better than searching on the Revenue's website itself. And then you need to go through the sign up procedure. To do that, you'll need your VAT number and various other details of your business, but it's quite a self-explanatory and simple system to use. Now, as I've already said, the timing of your sign-up needs to be done with some care. So once you've signed up for MTD, all future VAT submissions will be made under MTD. So if you do it before you're ready, then you might have a bit of a scramble to get your March return in on via MTD because you've signed up a little bit before you were ready. You also need to take particular care if you pay your VAT by direct debit. That's because the changing of which system at HMRC you are submitting to, so to MTD system rather than the old system, is a change for direct debit purposes, and so they have to give you a 2-week notice period before they can take any payments. So if you sign up immediately after having submitted a return, but before they've taken the VAT payment, then you may cause some complications with that payment. So I would suggest that you sign up after you've submitted and paid the last VAT return that you are going to submit under the old system. This might be the last one that you have to submit, or it might be the last one that you've just done, and then you decide, right, now we're ready, we'll sign up. So if, for example, if you have a quarter ended 31st of March, maybe submit that one, pay the VAT, and then sign up because you'll be mandated in thereafter. But remember that the times that you have to start keeping your digital records starts at the beginning of the first VAT quarter that starts after. So you might actually have to start keeping digital records earlier than you've actually signed up. And I've got a slide here that will hopefully explain that in a bit more detail. So this is the same table we had earlier in the webinar. It's just got an extra column on now for a suggested sign-up period. So we'll start with the first one. If you've got your monthly returns, so you are in MTD for VAT from the 1st of April for your April month. So you have to keep digital records from the 1st of April, but you wouldn't sign up until after you'd finished submitting and possibly also paying the VAT for your March month end. So as you can see there, you're not going to do that until partway through April, possibly even up to the 7th of May. So you'll be signing up at that point, but you'll have had to have started to keep your digital records from the 1st of April. The revenue are relatively relaxed in terms of how this is going to pan out. They realise that this is a transition for people, and they're not going to be penalising people for not keeping digital records. If they're trying to do so, the revenue will work with them. If people just completely ignore it, then they should expect to end up getting penalties. But if you're genuinely trying to engage, then you shouldn't be incurring penalties for failing to keep your digital records in an initial 12-month period of soft landing. So we move on further down the table now. If we look at a standard calendar quarter, again, you'll need to complete your digital records from the 1st of April, but you probably won't sign up until after you've done. I wouldn't recommend you sign up until after you've done your March return. Your first submission under MTD might not therefore actually be until August. For quarters that are slightly staggered, you can see the dates just roll on 1 month in line with your quarters. So the next step is, once you've actually signed up for Making Tax Digital with the revenue, you then need to tell your software that you're going to be making future submissions through MTD. The exact process of how you do this within the software will vary from software to software. It'll be something that you do within probably the settings section, or the area where you put in your login credentials for HMRC to tell it how to submit. Speak to your software provider about this. They'll be more than happy, I'm sure, to guide you through that process. At Streets, for our own clients, we've produced some emails which will be going out, if they haven't already, over the next few weeks, to people that we know use certain types of software, saying this is how you do it, this is where you go to sign in, and this is where you go in your software to link that software. But if you're unrepresented or your own accountants haven't communicated this to you, then speak to your software provider and they will be able to help you and tell you how to do this in their software. You will need your government gateway details to do this, but you'll have needed those when you signed up as well. If you haven't got any government gateway login details, you'll create this as part of the sign-up process. So are there any silver linings to MTD? Well, the fact that they're doing VAT first is in itself a good step. Income tax was going to be more difficult for people to get on board with because it was going to impose quarterly filing for them when they weren't used to it. Whereas those people who are already doing VAT returns are already used to making monthly or quarterly submissions. They're just the method of doing that and how they keep their records is changing. Keeping your records in more real time by doing it in a digital format, particularly with the online bank feeds, should help you to claim all your expenses, not to miss any, and therefore possibly help reduce your income tax or corporation tax liabilities. That's a silver lining. Using software can give you tidier record keeping, and there are also much more reporting functions within software than you perhaps have used before, and this gives you a much better way of monitoring your business's progress, its cash flow, you're monitoring your creditors, that sort of thing. It's just, there are benefits to using software. They're not necessarily benefits of Making Tax Digital, but as we said at the beginning, Making Tax Digital is pushing people into using software. So there are some benefits they will derive, albeit indirect ones. In terms of help and support, first of all, check how this affects you. If you have any queries on this, then I'm happy for people to contact myself at Streets. We have a wealth of knowledge in the firm about MTD and also the software. A good place to go though for general advice is VAT Notice 700/22. This is on the Revenue website and is the VAT notice published specifically in regards to Making Tax Digital. A lot of detail on there, a lot of useful information, and it is actually relatively easy to follow and read. Again, as I've already said, check your software compatibility, speak to your software provider if you're already using one. They should be on board with Making Tax Digital and will be able to help you make sure you're on the correct version of their software to be MTD compliant. You may need some help with posting the journals to prepare the VAT return in the software if you've got some adjustments to make. Speak to your accountant, speak to Streets, we'll be able to help you deal with this. Filing VAT returns on your behalf is definitely something that Streets can do. We perhaps encourage people who currently file their own VAT returns to continue to do so. But if you really can't engage with the new system and you do need help, especially the Excel users who need bridging software, then again, your current accountant, Streets, will be able to help you with this filing obligation. Streets are rolling out bridging software that is provided through our own software provider, and that will be made available to our clients shortly. So last thing to say really is to keep calm and MTD. It's not quite as bad as you might think. Just engage with the process and you'll find that actually it's relatively smooth once you've decided how to engage and which software to use. So now I think we'll move on to question and answers.
Great, thanks very much for that, Michael. Yes, so now is the time to have any questions answered. As a reminder, you can still submit questions through the questions pane in your attendee control panel. So first of all, let's have a look. We have a question in from Carly, and she's asking, if my software is already MTD compliant, do I have to still register with HMRC?
It's a good question. It's something that I think I've covered in the slide, but is worth emphasising again. The answer is yes, you do. The Revenue are not doing anything to automatically enrol VAT registered businesses into MTD. This is something the business has to do themselves via the sign-up procedure on HMRC's website. So there's two steps to this. You'll need to sign up on the Government Gateway website, on the Revenue website, and then you'll need to tell your software that you have done this and that you now want to submit going forward under MTD. Should probably note there, if there are any agents who are listening to this who are planning on submitting VAT returns on behalf of their clients, in order to do so as an agent through an agent login, you will need to create a new agent services account with HMRC. This is distinct and different from your current agent logins with HMRC. If you search for agent services account, again on the Revenue website or perhaps via an internet search, then you will find the correct area of the website to do this. You can set up one agent services account per UTR that you have for your business. So you'll need your business's UTR number, and you will need the address and postcode for its registered office in order to do this. Once you've created the agent services account, you will then link your existing logins to that agent services account, and that moves your authorizations over. So all the 64H you've got in place for your current VAT clients will then be matched to your new login, and then you'll be able to you'll then have authority to sign up those clients to MTD. But just to go back to the original question, yes, even if your software is compliant, you still have that two-step process: sign up and then activate it in your software.
Great, thanks for that. We have another question here from Matthew. He's asking, how do I know if my software is MTD compliant?
The best way to know is to speak to your software provider. You can look on the Revenue's website as well to see if they're in the list for VAT compatible software that is available now or is in development. But I would strongly recommend that you engage with your software provider to talk to them about it. Make sure that one, it is going to be compatible, and two, make sure you're on the correct version for it to be compatible. A lot of software providers are only upgrading their most recent incarnation of their software to be compatible. If you're on an older version, you may need to upgrade to the latest version to be compatible. So speak to your software provider.
Okay, and there's one more question that's just coming from Dave, and he's asking, do all businesses have to be MTD compliant? Are there any exemptions?
So yeah, there are some exemptions. There are, as the ones we talked about. The biggest one is for those businesses who are below the VAT threshold and who are registered with VAT voluntarily. They don't have to engage with MTD, although they can do it if they want to. But as I think I covered in the webinar, I would expect that position to change, and eventually they will have to come in. The permanent exemptions from MTD are for those who can't do it due to religious grounds, so they can't engage digitally because of their belief system. Also those who can't engage digitally because of age, remoteness of location, or disability. Effectively, these are the same exemptions that we have now for filing your VAT return online. The Revenue are not expecting an additional wave of people to be exempt. If you think you are exempt from MTD for VAT, contact the VAT helpline to make that application. And I think that's probably all I need to say on that.
Okay, great, that's lovely. Okay, it looks like that was the last question we've received. So I'd just like to now say thank you to you, Michael, for sharing your expertise with us today, and also to thank you all for attending today's webinar. Once you leave the session, you will receive a survey on the presentation, and we would appreciate it if you would take the time to complete that and provide your feedback. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of Business Lincolnshire and our presenter, thank you for joining us, and enjoy the rest of your day. Bye.